There are three important factors that we need to keep in back of our minds when we are trying to find the safest and the most high probability setups in trading. And that would be, first, we need to identify what is the market structure, meaning what is the current bias. Then we need to locate the proper key entry point, meaning trend line, support or resistance line, or exponential moving average. This is the blue line, 21 EMA. And then we need to identify what is the behavior around these key entry points, meaning is there a second entry? The second entry is a high probability setup combined with these two. Okay, and this would be the price action that I would see when I would open my chart today. So the first thing I need to do, I need to identify the structure. And structure is what? It is looking bullish. We are making higher highs, higher lows. We're above the EMA, so I'm going to locate the key entry point of these first two swings. This is how you normally find the trend line, and the third swing confirmed it. I put it to the side and market is working higher. I have an overshoot of a trend line, and overshoot a lot of times lead to break of a trend line. And after price will break the trend line, according to trend line rules, traders will attempt to make a new extreme, new high. So I'm waiting for price to make its way on a new high, but at the same time I have a resistance here. Okay, so I have a second entry short of the resistance, but at the same time I'm waiting for a new high. So I have two conflicting beliefs here. So what I'm going to do, I'm just going to sit on my hands and be patient. All right, as you guys can see, market have a doji and I have a big move up. Okay, and this means that the price action, this bullish uptrend, played out with the break. Price finally created a new extreme and the uptrend is over according to rules. And what will we have next? A big bearish bar. So when I'm watching this at this big bearish bar and we close below the EMA, this is definitely starting to look like a change of a trend and bearish momentum. And what do we have next? Big bullish bar, big bearish bar, and another bearish bar. Okay, so what I need to do, the three factors, I'm going to identify the structure, looking bearish, we're coming off the resistance. I'm going to locate the key entry point. I don't have enough price action to find me a bigger pattern. Okay, so I need to just start with drawing the short-term trend lines. And I need to identify the behavior. When I'm in a downtrend, which this seems like is going to be a downtrend because we're coming off the highs, we're below EMA, I'm looking for second entry longs and I'm looking for second entry shorts because it's a high probability setup at the key entry point, and I'm looking for failed second entry longs. This is the new high, first entry long, pullback, second entry long, failure, but it didn't trigger, and you're far away from EMA, so I'm sitting on my hands. Okay, so, and what do I have next? A big bullish bar. So it's starting to be fairly confusing now. I have another bullish bar and I have a bearish bar. I'm not taking this bar right now because this is just a first entry. This is the first attempt by the bears after this bullish leg up to go short. I don't want to go long. Structure is looking bearish, but this is confusing. And price pushed above the EMA. And we just confirmed the bounce of this resistance. So look at this. Once again, I have two conflicting patterns here. Price keeps pushing above the EMA, which is a sign that the trend is changing once again from bearish to bullish. But we're coming off the resistance. And remember, uptrend played out. So I don't want to go long, but I don't want to go short either. We have a nice bearish bar. We now have a first entry short, second entry short, which is a high probability setup at the key entry point, this resistance. But you have two patterns, but look what happened. Price started rallying up lower and lower. All right, this would be aggressive entry, but when you're watching this live, this is starting to look like a trading range. You want to be patient. And look what happened next. When I was watching market pushing lower and pushing lower below EMA, I tried to find a bigger key entry point. And you may be wondering, Thomas, why are you finding a wider pattern? Why are you not satisfied with this short-term one? Because if you take a look, this structure is looking way too big for this short-term trend line in comparison. Okay, there's much more price action than the short-term trend line. This is way too short and way too tight. Take a look here. This is a good enough price action for short-term trend line. You have a break and a new low, and this is a very tiny little move. This move, however, is extremely big, and we moved a lot of points down. So it means there has to be a bigger pattern. This is why I'm not satisfied with the short-term trend line, and I'm going to draw the bigger one. The move is just way too big for the short-term one to play any significant role in this. So as the market keeps working lower, structure is bearish, I got my key entry point right here, and I'm waiting for a high probability setup, the behavior. Okay, I'm no longer interested in buying. We're definitely coming off the resistance, uptrend played out, so I'm interested in selling. We have a bullish correction. We have a first entry long. I'm going to draw my trend line. We have a first entry short that failed and pull back. We have a second entry short. Once I see this, I'm expecting a second entry short of 2 key entry points. This is what I was expecting when I was watching this chart live. First entry short, second entry short. We have a second entry short trigger, but below bullish bar. Remember, when we are going short, we want to sell below bearish bars. When we are going long, we want to buy above bullish bars. We don't want to sell, even though it's 2 key entry points. This is extremely bullish signal bar. I'm sitting on my hands patiently. I have the short-term trend line working higher because I need to find and respect even the shorter term trend lines. And look what happens next. Once again, 2 conflicting patterns. I have a big downtrend. I have a first break of this big downtrend. So I'm expecting a new extreme, but at the same time, price broke above the EMA and we keep pushing higher. This looks bullish. Overall structure, however, is bearish, and bigger pattern always takes precedence. So I'm not thinking long. I'm not thinking short because we're about EMA. I'm being patient. All right. What do I have next? Bearish bar. A gigantic bearish move low. There is no way to enter. We have a clear break and we have a clear new low. And when I see a break and new low, remember the price action trend line rule. After a break, there will be a new extreme. After a break, there will be a new extreme. You even have a little break of this uptrend and a new high, new extreme. Take a note here. Write it down to your notepad. Look how far away price is away from EMA. EMA acts as a magnet and keeps pulling prices closer to it. When I was watching this live, I was honestly contemplating buying the market here. After a break and a new low, this is looking like a big depletion move down, and you're so far away from EMA. I didn't pull the trigger here. I was really contemplating with the idea, though, playing with the idea of going long here. I have a bullish bar. I'm going to draw my trend line. And look what we have here. First entry short, and we keep pushing lower. All right. So not only we have one new low, we have another new low. And what I was expecting here, I was expecting reversal pattern. I was expecting a break above the EMA and continuation working higher. So once you keep making new lows and new lows, you know generally what that means. Probably a bigger pattern in play. All right. So keep that in back of your mind. So as I'm watching this, we're starting to bounce and work higher. All right. And remember, when I'm watching this, the downtrend played out. So in back of my mind, I'm expecting still price to either go correction or straight up reverse. So I'm going to draw my trend line once again, like this. All right, I'm going to draw my trend line. I have a first entry short, but I don't want to go short because the downtrend played out. I have moved higher. Looks like we're working above EMA, but second entry short. So look at this. Second entry short. Extremely tempting to go short, but the downtrend played out and I need to follow the trend line rules. Okay, but at the same time, I don't want to go long either because we already have a break and a new high. So the uptrend played out as well. So the next bar is bearish and the next bar is bullish. Once again, extremely tempting to go short, but I can't. Extremely tempting to go long. I can't. Why can't I go long here? By this time, this is a congestion. We have 1, 2, 3, 4, 5, 6, 7, 8 bar going sideways. And how I know this is a congestion, EMA is flat in the middle of those bars. Look what happened next, a lower high setup. Huge confusion here. But look what happened here. We're supposed to go higher and there is no reversal pattern. There's strong rejection at the EMA and there is almost no bullish presence in the market. This is where I made my bigger channel something like this, because clearly we are not reversing, we are not working higher. So remember, identify structure, bearish, locate key entry point, trend line, behavior of the market, congestion, lower high setup, and then price keeps pushing lower. We have a tiny breakout, pullback, and then this is the new high, first entry long, second entry long. Remember, I'm looking for second entry shorts, and once we have a swing at the key entry point, I'm looking for failed second entry longs because people are going to get trapped going long in downtrend. This is the new high, first entry long, second entry long. This is where I took my first short for the day. I shared it with the community. You all saw it. Here I had a little bit of a slippage and I just had a manual error. This happens extremely rarely, but it happened. When I was moving my limit order, I accidentally, my hand slipped and I moved it 2 ticks below the signal bar. All right, this happens extremely rarely, but it can happen. Sometimes you will even buy instead of selling. It happens rarely, but that comes with the territory. That can happen. So in this instance, it kind of shook me off, but you know, I still hung in there and trusted the price action, following my rules. And this is a failed second entry long. Of the 2 key entry points, all 3 factors are in play. Market, you know, easy scalp, and we keep working lower. This is definitely a downtrend now. And I have a new low right here. All right, I have a low right here. I have a first entry short. Okay, I'm gonna draw my trend line. And I have what looks like is going to be a second entry short. Remember, structure, key entry point, behavior. Structure bearish, key entry point, 2 key entry points here, trend line and the EMA. And the behavior, it looks like a second entry short. When I see this, I'm preparing my limit order. If we get a 1 tick trigger below this bar, bearish bar, I'm taking a second entry short because 2-legged pullback is a high probability setup. Okay, let me draw it for you guys from the bearish perspective. 2-legged pullback is a high probability setup at the proper key entry point. But we never get trigger lower, and market keeps working higher, tiny break, new high. And look what we have here. First entry short, second entry short, bearish bar, we close below EMA. We just have a first break of this overall downtrend. So I'm expecting a new extreme of this bigger downtrend. All right. And this is the second entry short. This was my second trade for the day. Once again, you all saw it. It were quick, easy scalp. And I just want to show you guys, even though I started looking at the chart extremely early today, generally the trading starts after the market open, which is 15:30 in Europe, where I am located. So take a look. Market open 15:30 right here. This was the first trade. This was the second trade. 15:45. 15 minutes of work. Quick, 2 easy trades. 8 contracts in total. Where else you can make this amount of money in just 15 minutes? Trading is 100% if you ask me, probably the best job there is if you stick with this long enough and you master this. After this, I was done. I was enjoying my Friday because Fridays tend to be slow and I just don't want to push the luck. 2 easy scalps. I'm out of here. Then look what is happening. Price takes few ticks higher, instantly reverse down. We're still waiting for a new low. This is a still big downtrend. We are at the key entry point and this is a minor double top right here. I'm going to mark it as an aggressive entry because the signal bar is not ideal. This is just, you know, example trade. Next time you see a better signal bar, because there's a horrible stim at the bottom and that means people started buying at the very close and you want to stay away from this. Okay, and market, quick easy scalp, and look what we have next. I'm not thinking in buying the entire time, by the way. When this reversal pattern failed and we have a break in a new high, I'm starting to only think about selling. This is the new high, first entry long, pullback, second entry long, failure. Same thing right here, first entry long, second entry long, failure, second entry long, failure. This bar is quite bullish though. We're getting close to these lows. It worked, but we don't want to push the luck. The bar is a little bit too bullish and we're getting close to these lows. And look what we have here. Finally, a new extreme after break of this bigger downtrend. And what that means, we are expecting a correction or possibly straight up reversal. And look what happens. I have a bullish bar. I have a bearish bar, but we don't have trigger yet. And we keep pushing above the EMA. So what does that mean? Market is reversing. Okay, market is reversing. We're working higher. We're working higher. We have a first entry short, failed, and price keeps working higher. Okay, structure, reversing, locate key entry point. I got the short on trend line, behavior. I don't have a high probability setup yet. This is just a first entry short and first entry long. Okay, market keeps working. And what we have here, we have a first entry short, second entry short, failure because the next bar is bullish. This is what it's called a reversal pattern, but we are not touching the EMA and we already move quite a bit. And as I keep mentioning, guys, the best reversal pattern appears right after the EMA, and EMA is holding prices. You don't want to go long after all that move happened, I mean, you're not touching the EMA. You want to maximize your win percentage as much as you can. So I recommend skipping this. I didn't want to enter this when I was watching this live. Next, we have a doji bar, little bit of correction, and you have a first entry long, second entry long, off the key entry point. Structure is definitely bullish. You have a break of this uptrend, so you once again what you're expecting to make a new extreme. You're not thinking short no more. The downtrend played out, all right? The downtrend played out, traders. You're only thinking long now. And this is a second entry long, high probability setup. This is the behavior. Do I have a key entry point? I have my EMA, structure, bullish. Great entry to take. I'm going to mark this entry as a second entry long. And now it can be a continuation of the reversal pattern and quick, easy scalp. And what do I have? Big bearish bar. So hopefully you guys get the gist of how price keeps working. Am I looking for long at this point on? No, I'm not. I'm not looking for longs now. Why? I have a break in a new high, so I'm just sitting on my hands. If I have a good short setup, reversal pattern, I may take it. What do I have? A little bit of a lackluster price action. We have a first entry long failure, but it's just the first entry long. Look where we're pushing lower, so I'm gonna find a shortened trend line. But we're pushing below EMA and the uptrend played out, so it's normal for me to look for shorts. I have a second entry long. I'm not taking this. Uptrend played out. Second entry long failure. We have a break of the short-term trend line, so we're waiting for a new low. I'm going to mark it as an aggressive setup for advanced traders because we closed above the EMA. What you want to see when you're selling the reversal pattern, you want for price to close below the EMA. Here we just push slightly higher, but an advanced trader can look at the overall context and recognize that the context is so strong here to take a sell and quick, easy scalp. All right, and I'm not thinking in selling no more because I have a first leg, pullback, second leg, I have a break and a new low, and price keeps working higher. So even though I have now a bearish bar here, I'm not thinking selling. And think about this. You may be wondering, Thomas, why are you not making the channel wider now? Because the shortened trend line is now fits in comparison to these moves. These two legs are tiny. If you take a look here, these two legs are extremely big to just be satisfied with the shortened trend line. Okay, so the bigger the move, the wider the pattern, wider the channel I use. And we have a first entry short, pullback, second entry short, and look what happened. You have a shortened trend line. You ticked one tick lower and instantly reverse on one single bar. First entry short, second entry short, failure. Big bullish bar, you closed above the EMA. This is a gorgeous trap after downtrend played out and you want to take this. You closed above the EMA. So look at this. Structure, once again bullish because the downtrend played out. Key entry point, we are above the EMA. Behavior, felt second entry short, trap. A lot of people are going to go short after this downtrend played out. The market keeps working, and you finally scalped out. Okay, we keep working higher, we keep working higher, we keep making new highs. So what I'm going to do, maybe there's a wider channel because we keep making new highs, but now it started to be really confusing because now I have this resistance, but I have a bullish bias in market. Look what I have. Market keeps working higher. We're above the EMA for the majority of the time. This was a two-legged correction, but we have a strong resistance. So it is tempting to sell and tempting to buy. This is a wedge pattern. So I recommend not doing anything here. It's much better to not take a chance and be patient. We have a first break of this now up to, because we keep making new highs, new high. Attempt to make a new high, failed. First entry long, failure, well below EMA, so I'm going to draw my shortened trend line, copy it, put it down here at the bottom. So right now the trend is changing, and we have a first entry long, second entry long, failure. Okay, even if I don't have this trend line, which is okay, I cannot go short here. And why I cannot go short here? Because I'm going short directly into this down trend line. Can you guys see this? I'm going short after all that move down, and there is no room. I would be way overshooting the downtrend, and that's not okay. So even though this is a failed second entry long, coming off the resistance, I cannot go short directly into this trend line. The market keeps working higher, We made another swing, so there's a definitely this bullish bias. You have a first entry short, second entry short, and look at this, extremely tempting, resistance is holding, but there is a bullish uptrend, so I cannot take a chance here. It would have worked for a scalp, but I don't know what's going to happen. I have a break of the short-term downtrend, break, new low, perfect price action, so you're probably expecting for price to move higher. So you're looking for failed second entry short, you're pushing above, and you push way too higher, and there is no reversal pattern. There's a first entry long, second entry long right here, and market keeps working higher, keeps working higher. So these are the three factors that you guys need to keep in mind when you're looking at the chart. It looks confusing, but when you go bar by bar, it really makes sense, and it's not that hard. And hopefully you guys find the video useful. Keep studying during the weekend, enjoy the weekend, and I'm going to talk to you guys in the next video. So bye bye.